Yeah, good evening. It's Jim from JAGfx.com. This is just a quick video on some trading thoughts I have. It is Tuesday, the 28th of July, 2020. Look, I've just been having a few thoughts, wrote something down on paper, and I'm going to share with you guys today. Now, this is not a professional presentation, so bear with me. Now, you can always contact me at my website, www.jagfx.com, or my email address at admin@jagfx.com if you have any questions or want to comment on anything I say here. Now, this is just a bit of an how would you say it? Look, it's something I've been thinking about for the last few months and going to do something about it. I just want to ramp up the trading a bit without sort of going away from the high probability setup on something like the daily chart or something like that. Now, I'll just go through a few notes I've made here. I'll just work my way up the page, which I know is a bit stupid, but it's just the way I wrote it. So you can read along with me here if I talk too quick or you can't understand me. So the common sort of theme is that 90% of traders fail or blow up their accounts within 3 months or so. Now, whether that number's accurate or not, who knows? It's pretty close. But actual broker figures, and this is fact because they have to keep these figures nowadays with all the compliance, etc., they have it that 75% of traders lose. So 75% of traders are actually losers, and 25% either break even or are profitable. So out of 25%, they're either break-even traders or profitable. Now, out of that 25%, it's believed only a very small percentage actually live off their trading profits. So it really reduces the odds and just shows you how hard it is to trade or be a successful trader. Looks like it could be pretty easy being a break-even trader. Then you think, well, that's pretty good. You're pretty close to being a profitable trader. So, so we're getting there. So stats from major brokers, and I know this is a fact because I know people that work for brokers or have in the past, from FXCM and OANDA show that generally 60 to 65% of traders actually get the trade direction correct at the time of entry. So the traders are not dumb. They're getting the entry direction correct the majority of the time. So you think, well, that doesn't make sense, but so why do they fail long term? Now, we all know that. Probably the first one, unreasonable expectations. Want to earn lots of money quickly. Now, I get the impression that most people are coming into Forex trading or crypto trading or, like options or whatever. They look at it as a quick, get rich quick type of scheme, which we all know it's not. If you've been trading for a while, we know it's not. You can get lucky at times, and if you do nail it and you have a great system and you ramp it up, compound, etc., you can make lots of money, and it can be done quickly. But generally, when you're first starting out, it is unreasonable expectation to expect to be making lots of money quickly. Now, people are expecting targets like 1 to 5% a day or 100% a month. Now, look, I know traders that can do this and fairly consistently, but they're good traders. They've been trading for a long time. They've got it all. They've got it down pat. A new trader, you may jag a 1%, 5% day, 100% per month, but it won't be sustainable. Something will break or give. So most traders they're not happy. The new traders I'm talking about here, or people new to trading. Now, this is no reflection on those people. They're probably smart people, but the expectations, and it's probably a fault of the industry. I'm not a real big Instagram user, but from what I can gather, you've got your Lambo mob, the young blokes, young girls. Look, I've got no problem with young people trading at all, but there are people that are probably not as honest or as trustworthy as they make out to be. They hire the Lamborghini, the supermodels or whatever, and the flash houses, and they give you the impression they've made all this in 2 short years from trading Forex or something along those lines. It's not accurate. It's generally untrue. So don't be fooled by that stuff. And I'm not just saying Instagram. It happens a lot of places all over the internet. So just don't get sucked into that. So people, new traders are not happy with results like 5% a month, even though it would be way better than what your local bank would offer you on a fixed term deposit. So I'm not sure, whatever country you're from, for example, in my country, home country, Australia, a fixed term deposit for a year, these days you'd be lucky to get, and I'm probably being overly generous here, you'd be lucky to get 4% per annum per year. Now, the new traders, they're not happy with 5% a month. 5% a month is a good income in anyone's language. So now, the problem is with trading, you do get people that do make 5% a month or 10% a month or 20% a month or even 100% a month. That's doable. I've said that. But then you get the people, or I call them the crew, that compare us mere retail traders to people like Warren Buffett or, your Paul Tudor Jones or someone like that. The big institutional traders. It's like comparing apples to oranges. It's two completely different beasts. Well, for a start, Warren Buffett, he only earned, right, for example, I'm not sure what the Berkshire Hathaway fund earns, but it'd be around the 20% per year, and he's done that for many years. Now, that's spectacular for him. He is an investor, so he's not a trader for a start. And Warren Buffett has, I think, at least two that I know of, possibly 3 drawdowns during his career that were 50% or 50% plus. So they're big drawdowns. And you've got to remember too, the institutional traders or the bank traders, they're taking huge positions. They have to follow strict rules and regulations, and they're just so limited in how they can trade. Their hands are tied. They do move the markets. I know the Forex market's huge. I get that, the 6 trillion a day or whatever. But these boys are moving a fair chunk of that. And for them to move it, it's a lot harder, and they've got so many restrictions on how they trade, etc. Whereas us small retail traders, we haven't got those same restrictions or shackles. We're a lot easier position to do what we want when we want. We don't have compliance officers to, audits and all that sort of stuff, other than your own account. So just because you see in a forum someone says, mate, you think you can trade 20%, Warren Buffett only does 20% a year, just tell them to stick it. It's not factual. It's incorrect. It's comparing the wrong people to the wrong people. So now, traders get frustrated. They're normally trading a $500 or $2,000 account, $1,000 account, whatever, and they have dreams of making an income from this, which they won't. So they're starting small. The funny thing is, a lot of traders, when they're starting out, they'll open up a demo account, which is fine, but they'll open up a $50,000 or $100,000 demo account. Unless you're opening a $50,000 or $100,000 live account, just don't do that with a demo if you can. I know some demos have got some limitations and you have to go with big amounts like that. Generally, if you're planning on opening an account with $2,000, a live account, try and set your demo at $2,000 and see what sort of results you get and how you trade. Try and make that demo as lifelike or as true to what it's going to be as possible. So what happens, traders, they get their $500 account, $1,000 account, and they want to make it, they want to become full-time traders in 3 months. It's just pie in the sky stuff. It's not doable. It's going to put too much pressure on you. If you do make a lot of money, again, the risk is too high. It's not sustainable. There's other pressures and problems there. So don't think you're going to make a living from a $2,000 account. You're not going to, all right? So what does the beginner trader do, or beginner traders do? They trade big, way too big for their account size. Hence, when they do have a few losers, the account is absolutely blown out of the water, decimated. Like if you've got say a $1,000 account, you're not trading one full standard lot on a $1,000 account. I trade $20,000 accounts. My position size is generally 0.1, 0.2, 0.3. That fits within my sort of trading. I don't need to go any bigger, but I see people that are trading, and I know again it comes down to Instagram or forums and that. Especially nowadays, everyone loves to post a screenshot of their MT4 phone app, which I don't get. And you see position sizes, 8.32 lots. And I'm just going, mate, it just doesn't make any sense. So a lot of traders trade way too big. And it just takes a couple of losers and bang, you're gone. You're blown out the water. So risk is a big part of trading. Now this goes hand in hand with leverage, where leverage can become a problem for some. For smart traders, higher leverage is actually a good thing, all right? So leverage is not the evil thing that a lot of people make it out to be. There's nothing wrong with having a high leveraged account as long as you understand what it is, and I'll quickly give you some rehash on that. Right, leverage is just a tool, right? But the higher the leverage you have, the cheaper it is for you to trade, or the more positions you can open at one time, which also goes hand in hand with you can open bigger positions. So it's just cheaper for you to trade, and you can open more positions. And we'll take that a little bit further. All right, so the higher the leverage you have access to. So generally in Europe, you're limited to 30-1 accounts. In the US, I think it's 50-1. Other countries like Australia, you can get 300, 400-1. So the bigger the number, the higher the leverage. I've seen accounts up to 1,000-1. Don't be too put off by that, but just as a general rule, accounts that brokers that offer you 1,000-1, they're probably not brokers you want to go with anyway. But anyway, so the higher the leverage you have access to, the lower the margin requirement is for a trade. So all margin is like a safety deposit or a safety bond. So it's like when you rent something or borrow something, the owner requires a deposit. When you return that item, you get your deposit back. Just think as the deposit as your margin. So when you trade, you're actually borrowing money from your broker, so they require a margin or a deposit. So the higher leverage, the less deposit or margin you have to pay. I'll probably give you a couple of examples, I think. So if you stick with something like the 2% risk per trade rule, no matter what your leverage is, 2% of your account size is always the same. Doesn't matter if your account leverage is 30-1 or 200-1. 2% risk on your account is exactly the same no matter what your leverage is. So people get a little bit confused. So here's an example. A trader with 50-1 leverage may have to deposit or place a margin of $200 with their broker for a half a lot trade, where a trader with 200-1 leverage may only have to deposit a margin of $50 with their broker for exactly the same trade. So the 50-1 leverage trader has to put $200 down to take that trade, with a 200-1 leverage trader only has to put $50 down. I'll probably use two numbers exactly opposite there, which just probably confuse you, but you can read that. It's not hard. So, all right. So if both traders had a $2,000 account and were risking 2% on a trade with a 100 pip stop, both are still only risking $40 on that trade no matter what. There's nothing changes whether you've got 50-1 leverage or 200-1 leverage. Your 2% risk on a $2,000 account with a 100 pip stop, just assuming we're trading the Euro USD or something like that, we're talking US dollars here, both are only risking $40 on that trade. There's no difference. So that's it. The only difference being that trader with 201 leverage will have more available funds or more margin to take more trades. So the 201 leverage trader, he or she, when I say he, I'm always referring to either male or female, this trader will have 1,950 left to trade, whereas the 50-to-1 trader will only have 1,800 left to trade. You see what I mean? So all the difference is the amount left in the account, but that you get that money back once that trade's closed, so it doesn't really matter. And other than taking way too big a position size and not following a risk type rule, traders can get into trouble by taking too many trades when they have higher leverage. So it's something you have to be aware of. If you follow me in the Facebook group or the Telegram channels and look at my spreadsheets, I take lots of trades. I've got high leverage, I can take lots of trades, but my position size is small. It's not an issue. It's not putting any stress on my accounts. But if you're a $500 account and you're only on 31 leverage, you couldn't take the same number of trades I take. So it's another issue with leverage, and that is one you have to be aware of. You just might have to be a bit more look for the better setups, especially if you're looking at correlated pairs. Say you had 4 trades all on pound pairs, you might just take 1 or 2, look for the better ones, sort of thing, you know. Right, there's other reasons why traders fail. Could be they just don't have a decent trading method or edge, which is quite common, you know, like, or they jump from system to system, which we've all done. I've done it many times. You're always looking for something. Or their trade management is poor, i.e. stops way too tight or stops way too big, take profits too soon, etc., etc. There are many reasons why traders fail. And like I said before, that generally 65% of traders actually pick the right direction. A big problem is that, and we all know this, that a lot of traders let their trades get out of control when they go against them, so their loss is huge. But as soon as they get into a profit, they see 10 pips, 20 pips, they just want to take it. They're not giving their trades room to develop or mature. They see profit, they get excited, they see the dollars, they take it. Even though, they might have been risking $1,000 and $100 profit presents, they take the $100. It doesn't make sense. Again, not sustainable over the long term. So you have to have some sort of system or method in place and just make that good. Make that good. Just when I say make that good, I mean pick a method you're comfortable with. If you're in my groups, this will sound like a broken record. Pick a method you're comfortable with, stick with it, practice it, make it your own, become super comfortable, super consistent with it. Becomes rinse and repeat. So it's just a matter of doing the same thing over and over, no emotion. If the trade presents, take the trade, follow the rules, exit the trade. Use a little bit of discretion. Don't be a complete, rule follower. Use some discretion, and the more experience you get, the more your discretion will become better, where you can look at market structure and you just see things subconsciously that looks ugly or something like that. And one thing that does bug me a fair bit is I'm in a lot of trading groups and I see a lot of stuff. And there's one at the moment, there's a lot of traders in there, and it just seems to be, all you see is a question, what do you think of Euro USD? And I just think, what sort of question is that? What are they expecting the person to say? The person answering might be trading on the 5-minute chart, or it might be me looking at it on the daily chart. Or they say, I'm thinking about going short on the pound yen. What do you think? And I'm thinking, just do it. You shouldn't have to ask or get opinions or look for confirmation, or like I said, what is it, 95% of traders fail? If you're doing the same as those 90 or 95%, guess where you're going to end up? Probably on the failure side. So don't look for that sort of advice, or don't ask those sort of questions. Sure, post your setups, but do it properly. Post a chart and say, look, this is what I'm looking at. Has anyone got any constructive criticism, or why I shouldn't take this trade, or what do you think, or something like that? I've got no problems with that, especially when you're learning or starting out. You might be a little bit unsure. It could be something simple like a divergence. You're not quite sure if you've got it right or something like that, and you're sort of looking for a bit of a mentorship or direction. I get that. Or another thing that bugs me is a lot of traders are, they're analysts. They've got this chart drawn, and there's always two squiggly lines drawn. They're trying to show what's going to happen next. There's generally a bounce off a trend line, and up she goes, and stuff like this. And I don't get it. Honestly, I just I get the signal and I take the trade. I don't understand what they're looking sort of two moves in front, and it's a little bit frustrating when I see it, but maybe it works for them, so I can't really be critical, but it doesn't work for me. So I guess it's just a little bit frustrating, because a lot of people draw these little diagrams, post them, then they don't follow up. You don't know what's happened, if it works or not, or they'll come back 3 days later and go, oh, remember that setup I showed you 3 days ago? Look, this is how it worked. But they don't show you the 5 that didn't work. It's a little bit annoying. And one other thing, while I'm having a little bit of a soapbox rant, most traders are going against the trend. Now, look, I do it myself. I do it all the time. Don't get me wrong, I've got no problem with it. But just a lot of traders only go against the trend, which is something, again, I don't quite understand. With the trend is the safe bet. It's the low-hanging fruit. It's probably the easiest trades. I get it. People want to try and pick tops and bottoms. Yeah, but sometimes it's just not the smartest thing to do, guys. It's not. Trust me, it's easier going with the trend, and we'll get into that on a few chart examples and stuff like that. So don't. I'm not going to rave on about it here, but because I am raving on a bit. So we'll just continue on here. All right. So we'll go back to the notes at the top here. So I'm up here. This is where frustration sets in. And like I said before, it's going to be very difficult to make a decent income from a small account, even though realistically, if you were making 5% on, say, a $2,000 account every month, then that is $100 a month that you wouldn't be getting from your bank deposit. So if you put $2,000 in your bank, say you had $2,000 in your bank account, and you were getting, say you were getting 5% a year, which you might get in some countries. I don't know. I know in Vietnam, I think their term deposit is 7 or 8%, but inflation sort of takes a fair chunk of that, so I'm not sure if it's an accurate number or not. But anyway, so if you're getting 5% on $2,000 over a year just by putting it in the bank, that's $100 a year. So that's nothing really. But if you're making 5% on a $2,000 account every month, then that's $100 a month. Which, look, and this, I think my next notes, if I go up. Now, money means different things to different people, all right? So $100 for some would be loose change they keep in the center console of their car or carry it around in their wallet. I'd get that. Whereas for some others from maybe other countries or other walks of life, that could mean helping pay their rent or other bills. $100 means different things to different people. So if you think it's chump change, fair enough. But then again, if you're trading with a $2,000 account, you think $100 is chump change, maybe you should be trading with a $20,000 account or a $200,000 account. I do get it. People starting out, especially younger people, they put $200, $500, $1,000 in an account. So, but if you make $100 a month on that, you're doing pretty good. You know, that $100 might pay for you, I'm not sure what your bills are, but say that might pay for your electricity in some places. Might pay for your, you know, be quarter of your rent, 25% of your rent money. So, you know, it's all relevant. So don't think just because you're only making $100 a month on a $2,000 account that it's not good. To me, you're making money. That's a good thing. If you're making money, you can always ramp it up. You can add to that account. So if you're working, you can take some, you know, maybe $100 from your pay every month or $200 from your pay. Add it to your trading account. Just keep that same risk, and you just increase your position size slowly but surely. That $100 a month might turn into $200 a month, 200 to 400, 400 to 800. All adds up. It's all. So don't be too concerned about the small grind initially and the small amount. So basically, I'm doing this. I'm not sure where I'm going with this, but the purpose of this presentation or discussion, whatever you want to call it, or me just ranting away on my soapbox, and it is a work in progress. So there's going to be. I just want to see if it's possible to ramp up the income or the profits, is another way of putting that, from trading. All right. So we're just trying to look at different ways of trading without going away from the core principles of the trading. So now, you know, with me, my bread and butter style of trading is the high probability / divergence type trading. I generally don't go away from that at all. I might put some slight different twists on it. And as you've seen, if you've been with me a couple of years now, you'll see me doing stuff like hedging, etc. So some of the styles of trading are high risk, so they may not be for everyone. Now, drawdown may be an issue for some. Now, drawdown just means if you start with a $2,000 account and at some point it gets down to say $1,000, that's a 50% drawdown. That's a big drawdown, all right? So now, when you're doing testing, whether it be back testing with an EA or on a historical charts or a simulator or something like that, you're generally doing this over a few minutes or, you know, maybe less than an hour or something like that. So whereas in something like a 30% drawdown is easy, or so it seems, especially as you know you will eventually get out of it. But when trading on the right edge of the chart and not knowing what's coming next, so I'm talking about live trading here, when you don't know what's coming next. If you're in a 30% drawdown that could probably or potentially last for hours, days, or even weeks, that won't be pleasant, and most wouldn't be able to handle it. Now, I can confirm this. I remember many years ago, I woke up in a cold sweat. I had a big position on. I'd made some good money already. It was one of these high risk type things where I took a $2,000 account up to 30-something thousand, and overnight I basically blew. I'd already taken my initial deposit out, so I hadn't lost anything, but I blew all the profits just in one night. It just got out of control, big drawdown. And the problem with the drawdown is when you're in one, especially a big one, it doesn't take much to push you over the edge one way or the other. You're either going to recover quickly and well, or you're going to fail miserably and blow the account, or something along those lines. So when you're in one of these drawdowns and you don't know what's coming, it is stressful. So, and I know people say they can handle drawdowns, etc., but generally, you know, me personally, I like to keep it 20% out to 25% max. And this is especially the case if I'm trading with EAs or something like that. And all an EA is expert advisor or a trading robot. So, but I'll try and give you a few different ideas on how to control the risk levels. So don't get too stressed about that. There's going to be some stuff that I've covered before, either in the Facebook, Telegram groups or in my YouTube channel. There's not going to be anything earth-shattering here, as most of this is common knowledge type of stuff, but for some of you it may be a real eye-opener and maybe something new. You might have just joined my group a short time ago, or you're new to trading and just thinking, geez, I follow Jim Brown, but geez, it's boring. He only trades on the daily charts. There's not much action there, you know. I understand. Look, I've gambled plenty of time in my life, and I like the rush just like everyone else does. Everyone wants to be a day trader. You know, it's sexy, it's fast, it's cool, but it's hard work. Trading off the daily charts, yeah, I get it. It's not fun. It's boring, but it works, and it's over the long term. It's a slow burner, but it works. And if I've dropped down to the 12-hour charts, they're getting plenty of action, so there's no dramas there. But I get it. So it's just going to be a different way of looking at things, all right? So the gist of what we want to identify, what to do, the gist now, sorry, it's probably a bit of slang. So the idea is what we want to do here is identify a trade signal on a higher time frame and then drop down to a lower time frame to milk that higher time frame trade for all it's worth, for all it's got. For example, we may see a trade signal on the daily chart, so then we drop down to the 1-hour chart to take any trade signals in sync with that daily signal. So in a nutshell, if the daily chart saying sell, we drop down to the 1-hour charts, and guess what we're doing? Taking sell trades. Sell trades only. So that's it. And I know, see, I told you it wasn't earth-shattering or any... Now, I think we can do a little bit better than that by multiplying trade positions, etc. So this is where it does get a little bit higher risk, and we'll go into that in more detail in other videos. I'm not talking about grid trading here. If you're familiar with grid trading, I've got access to a pretty good grid trading EA. I don't use it that much. I find it a bit hard, a bit stressful. But I'm going to stick to stuff that most of my readers are already fairly familiar with, so it's nothing new there. And all I'm doing here is, like I always say with any of my books or any of my trading ideas, I'm just giving you ideas. I'm just giving you something to think about. Look at trading in a different way. I can't tell you what exactly you should do, and nor can I cover everything, every possible scenario. It's just way too many options available. You could put 50 successful traders in one room, and I can probably guarantee you there'll be at least 49 different ways of trading, I can guarantee you. It's just the way it is. There's just so many different ways to trade and trade profitably. So I'm not going to turn around to some bloke that's trading well and say, mate, you're a moron, because that won't work. But if it works for him or her, hell, keep on doing it. As long as it's not, they can sleep at night and follow the risk, and it goes well consistently. Got no problems. Trade whatever you think works for you. And here I go. Like I say, I can suggest a framework or an idea, and you just can go and make it your own. I harp on about this all the time. I just try to give people ideas. You find something you're comfortable with, both in the method itself and the risks involved. Did I mention some of these ideas could be high risk? Yeah, of course I did. So take it, make it your own, develop something that you'll and stick with it. I can't harp on it. Look, you get on the historical charts, get on the simulator, get on the demo accounts, forward test it. Open a small cent live account. Test it with real money. Live and breathe it. If you get a system, don't give up on it after 3 days because you've had 5 losses in a row, or it only produced so much profit, or it's too hard. Refine it. Keep at it. At least give it 100 trades, 200 trades. See what sort of results you get. See what you can change. Keep a journal. Keep spreadsheets, make notes. You have to do the work. I cannot emphasize that enough. It's not easy. If it was easy, we'd all be rich. Then there wouldn't be a market, because we'd all be rich, and it wouldn't make any sense. So this thing will churn and burn traders. And it's only the good ones that the cream rises to the top. So you have to do the hard yards or the work. but you have to get a method, ignore the next shiny object that comes along. Sure, have a look at it, but don't jump from system to system. Just find something that works for you and stick at it. All right, with these, look, I'm not sure. I'm obviously going to do another couple of videos, at least one, possibly two. We'll have a look at some ideas. I'll throw some EAs in the mix. I've got two EAs that I've got. They're functional at the moment. They're not fully built out, but I can use them in my trade examples, and we'll get into them, but not in this video. We'll go into the charts. We'll have a look at a few things, obviously. There may be more than one video. Yep, it's just all that. I'll add some notes. I've got notes to myself here. All right, now I just want to clarify a few things with indicators. Now, I get there's another big group out there, and they're normally the PA traders, the price action traders, and they've got very strong opinions about indicators. Basically, some of them just say indicators don't work, period. Look, I understand where they're coming from. I don't necessarily agree with them. I probably understand that indicators don't work by themselves, which is probably makes sense. That's why generally I use a combination of indicators, and they're not perfect. I can guarantee the price action traders aren't perfect either. They're quick to show you their winning trades, but not their losing trades. But I digress, and I don't want to put anyone down. But my indicators I use, and as you know, I use QMP filter, MACD Platinum, QQE Advanced, and some moving averages, draw some trend lines, etc. None of them repaint. So once they're in place forever. They don't disappear and reappear in real time. Once they're presented, they stay there. So you can look, if you get fall for a repainting indicator, normally band type indicators or trend type indicators and some histograms, etc. They look great on historical charts. Look, you'd be a millionaire within a month with some of them, but in real time, they readjust, they repaint. They're just not a good indicator. So, and the reason I'm saying this is because we will be looking at a lot of historical charts. I get that. And a lot of people say, but you don't know what's coming up next. I know that. But the indicators, the signal for me is simply a red or green dot. It's not hard. And depending where the red or green dot is on the MACD Platinum, tells me how my trade is and what sort of divergence I got. So it's not rocket science, but so I'm just trying to give you a bit of an idea about indicators. If you are in doubt about an indicator, if you've got access to a simulator, just put it on the simulator and watch it in action and you will see it repaint. If you don't have access to a simulator, then just load it up on a 1 minute chart and spend an hour of your life watching a 1 minute chart. And you can draw little lines on there and you'll see if it repaints or not. Generally within an hour, you'll know if an indicator works or not. So I use indicators. They don't repaint, so what I'm trying to say is they're accurate. Also, my trading methods generally have some hard and fast rules, all right? So when this happens, do this, etc. Just like anything, like flying a plane, they follow checklists. You should have a plan with trading, trust me on that. There can be some discretion involved. Now, as I said previously, that comes with experience, time on the charts. Just sometimes you just look at something, like it might be something with your job or something like that. You look at it and you go, look, it fits the criteria, but something doesn't quite look right. So I'm going to do this instead. And that's the same with trading. You look at a chart and you go, something's not right there, or something's a bit off. And at the end of the day with trading, if in doubt, stay out. There's one good saying, or, you can't lose any money by sitting on your hands or not being in trade. So, yeah, so there can be some discretion involved, and, or you might have something else affect you, like on my notes here, I've got huge news coming out. When I say huge, like they might be expecting a big reduction in US interest rates, or there could be a US election or a Brexit vote or something like that, big news, or price at very significant numbers, etc. Now today, as I do this video, I think gold's at all-time high, and it's very close to $2,000 US. That's a big number. 2,000 is a big number, and I can probably guarantee you there's plenty of sell orders just sitting at 2,000. If you've been watching Bitcoin for the last few months, it's struggling getting through the $10,000 barrier. It cracked through it last night. So it's a big number. It's like hitting its head on the ceiling. So it's eventually broke, but big numbers are pretty important when it comes to trading. So why I'm telling you all this is that maybe the case where you just get on the historical charts and base your testing on those. And, you know, I'm talking about the rules now. Others may criticise you for cherry picking trade setups, but if the rules are in place, the indicators are solid, then this shouldn't be an issue. Everyone knows my rules. Like when I call my trades in the Facebook group or the Telegram channel, you know, I'm not doing that within 30 seconds of when I'm taking the trade. I'm probably doing it within 30 minutes. And especially that first update for the day, I try to get that done as quick as possible. But even if price moves 20, 30, 40 pips by the time I do my screenshot, well, other than me already telling you what entry I got earlier in the day, generally there was a green dot or there's a red dot there, and everyone knows my rules. So it's their hard and fast rules. If it's a good setup, you know, it's obvious. So it shouldn't be an issue when it comes to testing, etc. Now, if you can go to a simulator, then that just makes it way more realistic, and you also gets you thinking a little bit more. You know, as I said, I love playing the historical charts. I spend a lot of time on them, but your mind will play tricks on you because you do see what's coming up on a historical chart. So you can see what's on the right-hand side of the chart. So your mind does pick that up, and it will subconsciously put some sort of bias in your mind. Apparently, you might not think so. You might try not to do it, but apparently it is a fact that does happen. So if you're on a simulator is like, even if you get on TradingView, you can use the old replay feature, which is like a simulator. So it's the same thing. You can see the setups. You might not be able to place trades like you would on a simulator, but you can use something like that on TradingView. So if you've got access to simulators, great. But, you know, most simulators cost money, and here we are. This is the simulator I use, Soft4FX, and that's a link. That's my affiliate link. So I'm not saying go and buy the simulator. It's $99 US. I know everyone can't afford it. I get that. There's other ways to use it. Not use it, but other ways, like I said, use TradingView or just get on historical charts. You don't need a simulator, but if you're serious about trading and you want to fast track your trading, especially your testing, then this baby, Soft4FX, not a very easy word to say, but it's a pretty good tool. I like it. I wish I had one years ago, but you know, they wasn't available. I think they did have something called Forex Tester 2, Forex Tester 3, and I think they're up to Forex Tester 4. Not as good, similar. I don't think it is as good because there's a few other things other than it's more expensive and it doesn't use the same coding language, whereas the Soft4FX, it's just an EA that goes on your MT4 platform, so you can use all your custom indicators, which is great. So the affiliate link, just if you are looking at that link and you do purchase it, mate, all my affiliate fees, the majority of it, as far as I know, according to Christina, goes to charity. So I don't even see the affiliate fees. And I have made a few dollars from the affiliate fees on this, and I'll be honest, but I don't think I've actually even bought a beer from it. All goes to some sort of charity, which is cool. All right, so in the next, what I have, I was going to do another video, but I don't want to do a whole video of me just chatting away, so I'll just do about 5 or 10 minutes on the charts here. And we'll just have a look at a couple of things. And these are things I've shown before, but I'll do up some better videos, etc. But in the meantime, we'll just have a look at a couple of things. So we'll start with just the basic stuff, all right? So here we're looking at a daily chart on the Euro USD. So this is the big move. I'm currently in this buy trade, which is great. So there's a green dot there, buy trade. So we might as well start with this, and people will say, well, you've just picked a great trend. I know I have, but that was the very last signal and I actually took it. So we'll start with that. So I've taken a 0.02 lot trade there. I'm in it. I've closed out half and it's going nicely. So it's a winning trade. Great. But let's see if we could make more money on a different time frame. So I've drawn the line in there. So that's my starting point. So I haven't got an end point. That's why I've just got both lines on top of each other. So basically on the 30th of June. So we'll look at a 4-hour chart first. So here's the same point, 30th of June. It's a start point. So we're only looking for buys. And really, you can look at divergence. You can look at any other things. There's one in here, buy trade. There. Here's another one in here. Possibly there. So there's a few trades. There's 3 trades in there. Now, would you have made more money than just trading the daily chart? Well, you could have had tighter stops, which give yourself bigger position sizes. Just use a previous low, whereas the daily chart, you would have just had your stop initially a long way away, 2% risk. So this you're obviously not getting as many pips profit, but your stops might be tighter. Your 2% risk gives you a bigger position size. So that's just a simple thing. You can look at things like divergence. You could look at just ignoring the MACD platinum altogether and just taking trades on the buy on the green dots. So you see what I'm coming from here? So let's drop down to the 2-hour chart. So we're on MT5 here, so that's why I've got. So let's just come across to where's the yellow line? Here it is here. So we're on a 2-hour chart. So we've drilled it down a little bit more here. So there's a buy signal in here. Maybe a buy. I'm just looking at high probability ones here. Definite divergence, hidden divergence. Take that one, load up, take more. Another hidden divergence. There and there. Yeah, it's hidden, yep. Load up, big trade. Just another with the trend, take it. In here, one, probably even consider hedging, take a second trade, all good. You're in an uptrend. Another buy in here. We're getting back into divergence territory. Hidden divergence, take the buy, take the hedge sell if you want to, take the second buy, go all the way up there. So that's your 2-hour chart. 1-hour chart. Let's have a look at a 1-hour chart. Even again, we're still looking at buys. And look, there's nothing to stop you from trading the 1, the 2, the 4, all the time frames and the daily, all on the same signal. If you want to ramp it up, just be careful of your risk. Be careful of the number of trades you take. So you're adding to it. You're not limiting yourself. And you might not be in a position where you can come down to the 1-hour chart or the 2-hour chart. Just take the daily, and if you're at your computer when the 4-hour chart sets up, have a look at the 4-hour. Once your daily trade's taken, then drop down to the couple lower time frames and watch them. You don't have to watch the daily chart anymore. You know where your signal is, and you check it 24 hours later, make sure it hasn't changed. So look at the 1 hour. So we take buy, 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 buy. Not compliant. Buy, buy, buy. Good signal. Yeah, iffy, but still definitely 2 in there. Buy. Touch and go. Buy. Buy. Touch and go. Possibly buy. Come back to the MAs. Pardon me. And another buy there. So you get the idea. Should have a drink of water with me. So we'll go back to the daily. So Jim, you cherry picked that. So let's look for something crappy. So hopefully we've got enough data here. So here's a sell signal here. It's not even a valid sell signal, all right? It's not, on that daily, it's not even a valid sell signal. So we'll have a look at that, and we'll say we'll go to this buy. We'll just go from one extreme to the other. So our sell's in here, and I'm trying to pick something that's a bit ugly, and there's your buy. So what, we've got the 6th of the 4th to the 29th of the 4th. So we're talking about 3 weeks. All right, let's see what we get here. We'll look at the 4-hour chart first. Where we are, the 6th of the 4th. We're not even close, are we? Jeez. All right, here's your, what to say, what's sells? What's sell or not? Yeah, I'll have to have a look there. Yeah, sell. Oh, you idiot, Jim. All right, sells. So here's your first one. MACD's platinum still above zero level. We can hedge, take a second one, probably hedge again, take a third one. Profitable. If you took just normal sells, you would have been stopped out. You may have been stopped out in that. You could have made up a bit on there. Maybe there's possible sell. It's hard to tell. Let's have a look at the 2-hour chart. Now, remember, I picked a crappy period here. It's not even a valid sell signal on the daily chart, but I didn't want to cherry pick stuff. So here's your sell up here. You might get a few pips by the time the MACD platinum gets to the zero level. Looking at sell here, doesn't go far at all. That's not a valid one. This one's a valid one, get some pips there. This one here, you probably get a couple of pips. This one here, you can probably get a few pips. In here, we're getting close. But take out the hedge, second sell, you might get out of break even. So that's a 2-hour chart. And this is a crappy signal. Here, you probably get stopped out, but you could probably hedge and you would make your money back there. It's not a valid, not really valid. Up here, not valid, not valid. So here we go, and here we sell, no go, probably get stopped out or hedge, then take the second sell, there you go. And in here, this is good, not valid, nah, touch and go. This one, probably get a few pips there. If you had to hedge, you could, and you'd make up again, might have another hedge, or you just take the sells, you know, like, especially when this currency is in, this time frame's got your 3 moving averages and a downtrend, you're just happy to take these sells anyway. And there you go. So that's just the gist of it. That's picking a crappy daily signal, you know. If you could just go from dot to dot if you want, trust me, there's different ways of looking at this. So if you just went from this dot to that dot to that dot, this is a corona, look, it's big. If you go back in time here, you know, red dot to green dot. If you took this green dot, you probably wouldn't get too many trades in there because the daily's going down. So that the 4-hour, the 2-hour, and the 1 hour, or whatever time frames you're looking at, probably not going to present too many trades. But then you do get on the good moves, like this, you know, like a sell move down like that, or even this buy move, you probably get a bit of better action in there. You know, take into consideration the whole setup, you know. You might have a double top, take more trades. You know, divergence on the daily, take more trades, increase your risk. Ways of looking at it. So we'll skip over to my other platform, which is MT4. Now this one's something I've shown you before. There is a video on my YouTube channel. If you put in ATR, I think if you just do search for ATR or ATR stop, you will see this video. Now basically this first video, pound 4-hour, it's a 4-hour pound USD chart. This ATR stop, the settings for it, there's two, is 1080. That's in minutes, so that means that is a weekly, so it's a weekly trend. I use 2 of them, you'll see why. If they're both green, here we go. If they're both green, then I'm looking to take buys. If they're both red, I'm looking to take sells. I'm not changing time frame or anything. I'm just looking at the time frame I'm on. So in this case, they're red. So I'm looking for sells. So sell. That's a valid one. That's not. This is probably maybe hedge or take it. Just leave it. Take a second sell. Then we have a change of trend in here. You can see in this little area here would have red and green. So you just either, if you're in a hedge, you try and work out the hedge. Then here you'd ramp up with bigger position sizes because you're taking buys. So you just would go along a bit on this chart. So it's all sells in here, buys in here. I'll see if I can find it. Sells in here, it's red. See if I can find an obvious flat period. So we've got buys all in here. So you're only taking buys. Obviously taking sells through here. I'm looking for a super flat period. So taking sells only. Simple. Now I'm just looking for a crappy period. Not very many good examples in this. Right, let's have a look at the 1 hour. That might. So this is a 1 hour, and this is into the daily. So this ATR stops on the daily chart. This is the Euro New Zealand. So here we're only taking buys. Here is flat, so you're just not taking any trades. Now we just go along with this. Might give us a better example. So these are all sells. Look, it's simple. The trend's down. Just keep on taking sells. Every time you see a sell signal, take it. You know, you could do the hedging. Just take it with a stop. Just take valid sell signals. Or just take every red dot and accumulate. See how much you can collect by the end. Get to the stage where you got 2,000 pips, cash out. Get to 500 pips, cash out, start again. Have stops in place. Maybe put a stop somewhere amongst the ATR stops or something like that. Now looking for periods where it's flat. I mean really flat. These are all good trends. I've picked really trending pairs, haven't I? You can see what I mean. Like this thing, it's like picking a low-hanging fruit. You're trading with a trend. Gets a bit ugly in here. All right, let's go to the. I'm probably dragging a bit on with this one. All right, this is the daily chart. This is the Euro USD daily, and you will find that this is a 43,200. That's a monthly. So it's a monthly in minutes. 4,003. What did I say? 43,200. 43,200 minutes in a month. So only taking buys. So this is just another extreme. Hang on a sec. This isn't probably not a time frame I'd use that often on this. When you do get, again, it's something you look at. You know, if you took a trade here, here's a good flat period in here. So for, you know, a couple of month and a half there, whatever it is, you're not taking any trades on this pair. It's stuck between a red and a green ATR stop, no trades. As soon as we get into green, double green mode, we're looking for buys. Here's your first signal here. You know, you stop there, you could just stay in this trade forever. You know, just follow, trail the stop up. Why get out of the trade? It's all green, it's all green, still stepping up slowly. In the meantime, you could be adding to this, adding to it, or just taking every green dot, you know. It's just so many ways you can look at the different ways of trading, and what I'm trying to do is try and get you thinking a bit more. That's all it is. But what I'll do, that's the end of that data. So that's about it for this video, guys. It's probably gone on a bit too long, and I apologise about that. But I'm just trying to give you some trading thoughts and some different ways of looking at it, and a bit of a thinking on the way I think about trading and ways that you should be thinking about trading. Probably not the most exciting video you're going to watch ever. But hopefully it will give you some ideas. That's the main thing. And what I'll do next is I'll do up another 1 or 2 videos where I get on the simulator or actually get on the EAs and show you what I mean in real time or in trade, in showing you the numbers more than just the theory. So that's about it. Thanks for watching. If you do like these videos, please hit the subscribe button. If nothing else, hit the like button. That would be greatly appreciated. And I will chat to you good folk another day. Cheers.